Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again at the euro currency. Situation on the euro right now is very interesting. So we continue our journey with all the stuff around the weekly hand shoulders pattern and what's going on, because it's really fast drop was on Friday, and whether it makes any sense to keep this on the table. I mean, the possible retracement to the 120 area, or maybe we should refuse this and be ready for a downward continuation. Well, despite Friday's drop, it was really strong, but it still doesn't tell you. It doesn't tell you that everything is lost and your currency will just continue dropping. Yes, we see the fundamental background that stands beyond these processes, and it means that it's not just some technical action, technical drop, but there are some real fundamental events stands beyond of that. But it doesn't mean that any relief couldn't happen here, and that we should take out of the table this possible retracement to 120. Currently, guys, we see the signs that market probably will continue to move down and will be another leg to be formed right to the 113 area. But at the same time, we do not refuse our idea with a possible 120 retracement. Yes, on the weekly chart, this will be just retracement. On the daily, it could be a really significant action on the 7 points to the upside. But on a weekly, it will be just a pullback. And we still keep on the table the possible idea of the hand shoulders. Why we do this? Because, well, currently we have some hints that probably market will proceed lower. The first hint is that here we have the acceleration down. So we have mostly a tail closing of the week with this drop. And market stands at 127 of the butterfly. It increased chance on the further drop to the 1618. The same story is around with inner A, B, C top XLP target. On Friday we have called it to close the shorts, and this market has hit this target, or at least the tightest stops. Actually, this could be some real pullback here, so we'll talk about later about this. But at the same time, some hints exist that sooner or later, but this another leg down probably will happen. Second, if you will pay attention to this nasty candle that was holding the price action within the 2 months in this range, usually when the market breaks its range, it moves for the same length to the downside as the length of the candle. So if you will count it here, clone it and drag it here, you can see that this target coincides with the 1618 of the butterfly. Third reason, if you'll take a look at the dollar index, you'll see that 127 target of the butterfly already has been passed and market standing to the 1618. And so dollar index moves a bit faster than the euro currency. Finally, why we also keep on the table the possible reversal here, although on the first glance it seems that everything is over and probably downward action will continue. Well, guys, mostly because of the feature of the butterfly in the shape of the hand shoulders pattern. Because butterfly very often becomes the partner of the hand shoulders, and for the hand shoulders the typical ratio is 1618 but not 127. That's why we have the positive view on this moment, and do not haste it with some upsetting with this drop is continuing. Absolutely not, because 1618 and the butterfly here could lead to the reversal and forming of the head with potential pattern, and the first action could become right to the 117 neckline. Minor retracement to form the right arm and upward action. If our perfect image here will be correct, in this case you can see that ABCD target stands approximately the same as we have suggested, 120. If market will keep the shape of the hand shoulders. That's why it's nothing has lost yet and everything is possible, but still we have to acknowledge that if reversal will happen, it will happen probably from the bit lower level, and it will be 113. Another reason, guys, why we're all watching positively for the 113 is because if you'll take a look at the weekly chart and read our weekly report, you'll see that 113 is a weekly oversold. And that will be additional factor in favor of possible upward action. So, but this is a bit longer perspective. So what we could do in the beginning of the week. So as we have suggested that we will be watching for another leg down, it means probably that on Monday, Tuesday, we could keep an eye on possible bearish steps. Currently, guys, take a look. That market has reached the XLP target 127 extension of the bottom line and daily oversold. It means that is the not bad background for a possible upward reaction. While the scalp traders could focus on this reaction, that's actually called as the Kibi trade by the Judd Napoli. It has approximately the same mechanics, the same reasons as the stretch pattern, the combination of the fib support and the oversold. But here we have the oversold and the extensions. But they actually mostly the same in nature, while they are a bit different in the trading. But we are mostly interested with the bearish setup. We are not intending to trade euro on the long side of the market. And for this bearish step, I think that we could keep an eye on the hourly chart in 114.75 area. So take a look. We have the perfect for us down. 114.75, 113.80. This will be confidence resistance. This will be also the weekly pivot point. And I think that could be a very good opportunity to appearing of the bread butter sell trade. So it will be the bread butter on the 4-hour time frame chart, because for us down we have on the 4-hour time frame chart. But we will use hourly chart. Just it's easier to build the levels here, and it's a bit better picture. So it seems that will be the good reason for trying to take the short position, because the bread butter gives us relatively safe opportunity to go short with a small risk. At least minor retracement here should happen. That will let us to move our stops to the break-even. And if we will get lucky, particularly this retracement, this bread butter trade could become the starting point that will trigger action right down to the 113 target on the daily chart. That's our trading setup for a coming week. So first, in the beginning of the week, we are watching for a sell opportunity around 114.75, 114.80. Then we are managing our position. As soon as market will start to move down, as I said, moving stops, just protecting your profit, and so on. And watching for downward continuation to the 113. If we will get lucky and it will be completed, around 113 area, we start to watch chance to go long. But this probably will be story for next week already.